Hello, my name is Jan Smith, co-founder of KoreFusion, and welcome everybody to our 5th episode in this videocast series of Payment Trends by KoreFusion. Today we're going to be talking about Libya and the evolution of its payments landscape, and bringing these insights for you today. Joining us again is Sara Baa'ra, who is today, I think you are in Amman, and has been helping us with multiple projects across GCC and Northern Africa. So thank you, Sara. Shukran jazilan for being back on the show. And for those of us joining, or those who are joining the first time, can you tell us a little bit about yourself, Sara?
Thanks for having me on. Again, my name is Sara, and I'm a strategic consultant here at KoreFusion. Most of my experience lies in payments, financial services, and fintech, predominantly in the Middle East and Africa regions. I am currently in Amman, Jordan, but I am based in Dubai and moving around constantly to learn more about these markets.
I'd also like to take a quick pause and remind the audience of two things. First is the format of this episode, which will begin with a presentation of the facts and figures and the lay of the landscape of payments and financial services in Libya, followed by some of the insights drawn from our research and conversations there. And lastly, having an open sky analysis of the future challenges and opportunities for payments in Libya. It's also important to talk a little bit about Libya itself and why this is such an exciting country to look at and analyze. Libya has been known for having years of strife, but during those years of strife, some very particular attributes have emerged in the payments landscape in Libya. First and foremost, there was either a duality or an absence of a central bank. There was also issues with liquidity, and all of this came together to create very different patterns around digital payments adoption and attitudes towards cash in the country, particularly contrasting the eastern part of the country with the western part of the country. This has all come together now under one roof, where the central bank has come together, and there is now a concerted regulatory effort to govern payments and the emergence of digital payments in Libya. And it is in that scenario that we've recently been doing some work in Libya. And it is now our 79th country that we're doing work and analysis in it. So without further ado, I'd like to take you into a presentation of the facts and figures around Libya's payment landscape. So Sara, to begin today's episode, can you walk us through a little bit about Libya's payments and emerging digital acceptance landscape?
Absolutely. So as you just described, Libya's economy does face some challenges, and that does have an impact on the payment habits that we do see within the country. The economy is largely cash-based, and that's mainly driven by people's trust in cash. They trust what is tangible, what is familiar, and what is immediately accessible to them. That trust further drives a preference towards cash and a reliance on cash, and basically seeking access to cash. Another aspect to the challenges that Libya's payment landscape faces is really a limited access to financial services. So not everyone in Libya does have access to a bank account, and for those that do, the products and services that are offered tend to be quite limited. So we do have a high portion of the population that is banked, and that is primarily due to the 80+% that are employed by the public sector and therefore required to have bank accounts. Those bank accounts are predominantly with public banks as well. However, the services and the products and the different things that they have access to in those accounts is very limited, beyond just the account itself, as well as perhaps a debit card. So what they do have available is insufficient, and at the same time, it is very difficult for them to access private bank offerings, either due to different requirements to get these products or open this account, or to the costs that are associated with opening an account at a private bank.
Thank you for that, Sara. And Sara, you, I guess, carry the banner of now our 79th country in terms of global coverage. Can you tell us a little bit about what we did there recently, who we spoke to, and how we came about presenting the figures that we will be showing to the audience very, very shortly?
Absolutely. So the main idea behind this project is trying to understand what are the cash use preferences and how does that compare when looking at digital payment methods such as cards and e-wallets. And in order to understand that, what we did is we spoke to 3 different groups. We've spoken to consumers, we've spoken to small and medium-sized businesses, as well as online-only businesses. And this was in the form of in-depth interviews on the ground, speaking to these different players, and at the same time conducting different surveys and gathering the responses and analyzing these responses. And then from this analysis, we've also cross-tabulated it with different key variables to see what trends come up when we look at it from the perspective of different demographics, such as gender, region of residence, type of employment, and so on. And to complement our survey findings, I'd like to emphasize that we did have ongoing conversations with some of the women in Libya over the course of about a month in order to understand their interactions with banks, how they use these different products, their preferences for cash, and at the same time, giving a bit more depth to the anecdotal insights that we've heard and being able to provide some much needed context for the numerical analysis that we have here.
Our next section is going to be talking about the actual research and insights that we have coming out of Libya. And to give a little bit of context to that, as Sara was saying, we had in-depth interviews accompanying the life and habits of particularly women over almost the course of a month. That was supplemented with in-depth interviews with merchants, merchants selling online, with consumers making their everyday payments and interacting with banks, as well as looking at what the banks themselves and other fintech and emerging payment players such as mobile wallets and e-wallets are doing in the country. With that being said, I'd really like us to move into the next section of our videocast, which is about the insights themselves from the research that we're doing. What do you think, Sara, are some of the important insights and data points that emerge from the research and conversations we've had in Libya?
So I think first, and maybe quite obviously, is really the dominance of cash. Cash is the most preferred payment method for the different transactions in Libya. And we've also seen it as a motivator for both consumers and businesses having multiple bank accounts as well as multiple e-wallet accounts, because they're trying to increase their access to cash and ensure that they always have basically an easy source of cash. Although ironically, 93% of our surveyed consumers do have bank accounts and 85% have active debit cards. So again, very high bank and card ownership. However, this is just another way to access cash, especially for those who are employed in the public sector, because they do receive their salaries through their bank accounts. So this is, again, driving an adoption not just in terms of cards and bank accounts, but also for e-wallets. However, that growth in adoption is still limited. 60% of the consumers that we've surveyed do own at least one e-wallet, and 87% of the businesses have at least one personal e-wallet. However, there are different challenges that really restrict the use of e-wallets in Libya, particularly its limited acceptance footprint, so it's not really accepted everywhere. It's lack of interoperability, actually. So you would need to have multiple e-wallet accounts in order to accept from different e-wallets or to pay to different e-wallets. There are also rising concerns about fraud that are associated with e-wallet payments. And finally, there are some user experience issues that are really hindering more widespread adoption of e-wallets. And finally, a very interesting data point that emerged from our research is really this desire for digital salaries. So while cash dominates and it's this primary method for salary payments, representing the main method for 64% of private sector employees, 50% have indicated that they would be satisfied or very satisfied to receive their salaries digitally. So it does indicate that there is this general openness to receiving digital salaries as a way to avoid any cash-related difficulties. So to sum up, cash is quite dominant. However, we do have high bank and card ownership and a budding e-wallet adoption. Nonetheless, the reliance on cash is still there. However, we do see a desire for switching over to more digital methods of receiving salaries in order to move away from cash.
Yeah, that's interesting. It's a very conscious desire to escape the cycle of cash and yet finding challenges in doing so. That really, I think, puts e-wallets in the front center of the stage. Um, what was there interesting that we learned about in terms of e-wallet usage that you think is worth sharing?
So when it comes to e-wallets, one of the main reasons that people don't really use them or see a need for them is the limited acceptance footprint. 68% of the respondents that have multiple e-wallets have them just because merchants can't accept every kind of e-wallet. So if a merchant accepts e-wallet A, they need to have e-wallet A. If they accept e-wallet B, they need to have e-wallet B. So this lack of interoperability and merchants refusing to accept or not having the right e-wallet to accept really hinders its use. The second aspect about e-wallets is that they're actually often used for cash access as well as for different e-wallet transfers. So many of the individuals that we've spoken to and surveyed do hold multiple e-wallets in order to access the ability to withdraw cash or the ability to transfer funds to others using different platforms. And in some instances, that allows them to get cash from those different people. So transferring that money to them and then receiving cash in return. And
And
finally, some have...
sorry for interrupting you there, because I know you've got a couple of other points that you likely want to share with us. But when you say access to cash, it almost sounds like we're going back to this idea of the infrastructure being limited or unreliable. And so you wouldn't necessarily trust just having one ATM card or one e-wallet to withdraw your cash because you need the cash on a daily basis. It's almost like you want to spread your eggs in many baskets and make sure that if one bank or system is down, you can use the other one. Is that the right way of looking at this when we say that they want to access cash?
Exactly. So cash access here is so vital that people are trying to increase the number of ways they can do that, increases the different sources of cash, whether that's more cards to access different ATMs, more e-wallets, or even using these methods to access cash from different individuals, different merchants, and so on. So yeah, that perfectly summarizes basically what we see here when it comes to the infrastructure and the need for access to cash.
And in terms of merchants and their acceptance or how they use e-wallets, what did you see there? And I think this is where you were going to go with your next point.
Yes, so we have seen merchants use e-wallets for their business. 80%, 89% actually of the MSMEs that we've surveyed use their personal e-wallets for business transactions at least some of the time. And in terms of different kinds of e-wallets that pop up, we do see Sadad to be the most popular platform for businesses, followed by e-wallets such as MobiCash as well as Itfali. So merchants are using e-wallets more and more for their different transactions. However, you do see some issues impacting e-wallet adoption and use, such as the high concern over fraud. So 75% of the online-only MSME respondents that we had have expressed high levels of concern about e-wallet fraud, and they've seen it as a major barrier to using and accepting e-wallet payments. Nonetheless, there is still some potential for growth when it comes to e-wallet, and that would mainly come when you address these different acceptance issues, offering incentives to both consumers and merchants, as well as reducing the fees that are typically associated with e-wallet payments and that typically are quite high. When addressing all of these, you could really boost e-wallet adoption in Libya.
Understood. And I remember what you were sharing through the course of the project, and because we were following these groups of women in particular as they faced everyday transactions and use of the different digital tools, we heard a lot of like the human story of how difficult it is to make payments, some of the frustrations, also some of the times of the joy of being able to use a digital payment when it worked. What were some of those things that stood out to you that you think kind of bring again this dimension of humanity to those facts and figures that you shared with us?
So the first thing that really stood out to me through their experience is really how much anxiety is associated with payments. So again, you have this liquidity crisis ongoing. You don't know whether you can access cash, and when you go to do that, the lines at the ATMs tend to last for hours. And the cash that you do have on you, you tend to keep it as kind of this emergency reserve. So really just urgent and payments that need to be done. So again, there's this really strong sense of anxiety when it comes to payments. For instance, when you go to the shop, you can't really tell whether today the merchant will accept cards, whether he will then reject cards in order to favor cash and increase kind of his liquidity to pay his suppliers, or he could be facing network issues, the POS device isn't working. There are just so many factors that make card payments so difficult, as well as e-wallet payments. And at the same time, you might not have enough cash on you to complete the purchase, or you'd rather keep this cash for different transactions. So there's really a lot of anxiety because they're facing so many issues with the digital payments, and it's making it so unreliable. And at the same time, your access to cash isn't always guaranteed day to day. And so it was very interesting just to see their perspective and see how, despite what the numbers are telling us about this high card adoption and different card use, it's still not a very convenient solution, and we still see a lot of issues pop up. A second aspect to these experiences that we've heard is how gender plays a role here. And also from the women that we've spoken to, and specifically related to their experience, it was interesting to see how their involvement in the economy has changed over time and what they've noticed with other women as well. So due to some regulatory changes, women basically have to take charge of their own financial accounts. They need to have their own account. And at the same time, we have seen another change when it comes to telecoms. So women would need to have their own telecom account and have their number registered to their own name. And that did result in quite a stir at the time because it was seen as something of a taboo for women to go to the telecom offices and to do this kind of registration. However, it was mandatory, and it did drive more and more women to register their own accounts and to take charge of their financial accounts as well. However, there was kind of an aspect missing there of educating them on how to manage their accounts. So one interesting story that we've heard is one of the women didn't even know what her salary was or how to check what her salary was. And when she would stand in line at the ATM, there's usually a person at the front of the line helping the different women basically put in their card, put in their PIN code, and get the money because they themselves did not know how to do that. So that's another interesting aspect that we've heard there, where women were becoming more involved in the economy and they've had a more present role. However, that was not accompanied by an increased education or awareness on how to manage these accounts and what to do.
I'd like now to move on to really, I think, exploring in the third part of our video cast here, exploring what is the future for payments and digital products in Libya. It sounds like we've got a lot of challenges, but every time there's challenges, there's got to be a lot of opportunities. So what do you think are some of those opportunities today in Libya?
So I think there are three key opportunities here. One is related to this counterintuitiveness of relying on cash, but at the same time having this high bank and card ownership. And it mainly comes down to digitizing the supply chain. So digitizing these SME businesses and their supply chain and really addressing cash at the source there. And by minimizing the role that cash plays in those supply chains, you can actually reduce their reliance on cash, and that kind of has the trickle-down benefits where the consumer is now able to pay with cards, merchants are more comfortable receiving card payments, and so on. So just to sum up that point, it's really just reducing the reliance of cash within the supply chain in order to minimize the role that it plays here. The second opportunity that I believe is key here in Libya is really improving access to cash. So we've seen how vital access to cash is, how reliant on it both consumers and merchants are, and how it really affects the level of trust that they have in the system. Because from the conversations as well as the survey responses that we've seen, people tend to have low levels of trust in banks, and any kind of negative experience or feeling that they may lose access to their funds when they put it into a bank account or e-wallet account. Really affects the relationship that they have with these banks and e-wallets. So it's really important to improve the ATM network or the cash withdrawal options at merchants in order to build this trust in digital instruments and make people feel at ease that they do have access to their money. They can use their money through this instrument, and basically providing them with the sense of access to cash. And finally, the last opportunity here is really building trust. So building that trust in digital payment systems needs to be built through education, community engagement, as well as addressing key issues when it comes to acceptance, whether it's expanding that acceptance footprint or addressing some of the issues that they face within the already existing acceptance footprint, such as network issues, merchants charging extra fees, or kind of a lack of understanding that comes with accepting these digital payments.
What else do you see in terms of just like the general trends for digital payments in Libya? Again, we've got lots of cash. We have a disproportionate, for the amount of cash in the economy, number of banked adults. We're seeing e-wallets make 2 steps forward, 1 step back type of progress. We've got cards there as well. When all of this comes together, what do you see as potential trends over the short and medium term in Libya?
So one main trend, and this does drive digital payments, is actually improving the cash access network, whether that's improving the agent network or working with the merchants themselves to see if there's a way in which they can help with access to cash, or looking at the ATM infrastructure in general. Because again, that builds up the trust and builds up the interest in adopting these digital payments and thus relying more on these forms of digital payment. Generally, there is a cycle where merchants do need to pay their suppliers in cash, and thus they no longer accept card payments, or they force consumers to pay in cash. And that has really resulted in multiple trends that we've seen where consumers resort to the black market to get access to cash. And in some instances, merchants do as well in order to get the cash that they need for their suppliers. So again, this just reinforces the idea that cash is deeply embedded in the system, and we need solutions to address the entire value chain. And that could include things like community engagement, which is very important because you want to build that trust in these digital instruments. You want to focus on digitizing the supply chain and reducing the role that cash plays there. Again, improving the cash access network, because by making cash easily accessible, people would feel more comfortable using their cards and e-wallets. It would also be very important to create financial educational campaigns, making people more aware of how to use their accounts and the importance of basically maintaining the privacy and security of your accounts, and covering all these different concepts so that you can increase the trust and increase the ease of use that comes with these digital instruments. And finally, you could potentially collaborate with different ecosystem players in order to develop solutions that are more tailored to Libya's needs.
Yeah, Sara, so that's really interesting, that last point that you brought up about the players in the ecosystem needing to come together and work together. That definitely shown through in what you were sharing about the lack of interoperability, the need to have multiple bank and e-wallet relationships. That's just a cumbersome way to go about digitizing cash. So yeah, I completely agree with that last point. And as I hear what you're sharing with us and recalling what was seen on the project, I take away, and I think the audience should take away, that we've used the word counterintuitive a couple of times here. There's a counterintuitive lesson here, which is, in order to digitize, you need to make access to cash easy, feasible, to the point where it almost becomes automatic that you know you're going to get access to cash. And I think it's because Libya has come out of these years of strife where there wasn't infrastructure, there wasn't reliability, that there's such attachment to cash. And I recall seeing in other countries in times of natural disaster or strife as well, this fall back to cash, right? So I think that's a really important lesson that you shared with us here, is that access to infrastructure, to reliability of services is as important as simply just offering a digital e-wallet or a card solution or slapping a POS and acceptance device with a merchant or a shop. It's almost as if you're dealing with the symptoms and not the causes, right? And you need to take that step back. And a further step back would even be looking at the supply chain and the needs of the merchants, right? Because if you don't address that acute pain point of why they need cash and the lack of digital payments, you're never going to solve that last mile. So again, thank you for sharing all of that, and thank you to the audience for accompanying us on this 5th episode in which we looked at Libya. And Sara, again, many thanks for joining us again and your insight. It's clear to me that there's a lot to have been learned from Libya, which is probably not a country that is on most people's radar, but there's a lot of rich lessons. So thank you.
Thanks for having me on.